One of the things I get asked the most from business owners is how and when to pay quarterly estimated taxes, and what are quarterly estimated taxes even for. So in this sneak peek, we're going to dive into the reason quarterly estimated taxes exist, what the IRS expects from you, and how to calculate those taxes and when to pay them. So a lot of business owners get confused as to why quarterly estimated tax payments exist and if they even apply to them. So basically the IRS expects you to pay in income tax throughout the year. So if you have a W-2 job, you most likely have withholding on your W-2, which is a way of paying the IRS income tax throughout the year. If you're self-employed, you probably don't have withholding anywhere, so you're not making those payments. Now, the rule is the IRS expects you to pay 90 to 100% of your prior year tax liability throughout the current tax year. And if you pay in this amount throughout the year, you will not be subject to underpayment penalties from the IRS. However, you may still owe in April. So this is just a way of keeping the IRS happy and avoiding underpayment penalties. So one way to calculate how much you should be paying in estimated taxes is to look at your total tax liability from your prior year tax return. So look at your Form 1040, page 2, line 63, and that's your total tax liability. Now you're required to pay in that amount of tax throughout the current year via quarterly estimated tax payments. So take a look at that number and make sure you're paying in that amount to the IRS. Now that you figured out how much you need to be paying in, there are different due dates for the quarterly estimated tax payments. So for the first quarter, the first payment is due April 15th, for the second quarter, June 15th, September 15th, and then January 15th of the following year. So make sure to put these on your calendar starting January 1, 2019, so that you don't miss out on these due dates. Okay, let's recap really quickly. Quarterly estimated tax payments are required for you as a business owner to pay in 90 to 100% of your prior year tax liability. However, that does not mean that you're not going to owe taxes in April. This is just to keep the IRS happy and to not have to pay any penalties. So keep in mind what you're making during the current year and try to figure out what you're going to owe in April. So I know quarterly estimated taxes can be really confusing, and figuring out what you might still owe in April can be really confusing. So figuring out how much to save throughout the year, how much to pay throughout the year, it's a little overwhelming. So if you want to learn more and walk through our different worksheets that help you actually calculate this information, go to tackling-taxes.com. I'll see you in the Tackling Taxes e-course. Thanks, y'all.